This is a demonstration of the exercises for Chapter 1, S1, 12, 13, and 14, and the problem tells us that Centerpiece Arrangements has just completed operations for the year ended December 31st, 2018, and this is the third year of operations for the company, and they have given us data for the business, and they've got listed for us several accounts with the balances as of December 31st, 2018. And the problem is going to require us to prepare an income statement, a statement of retained earnings, and a balance sheet for Centerpiece Arrangements as of December 31st, 2018. So, first of all, when you're a new student, sometimes it helps if you go through and actually identify which of these statements each one of these accounts will be listed in, because that can help you not get confused when you're trying to prepare the statements. So let's go through for each one of these and we'll tell which statement they will be on. Insurance expense, service revenue, utilities expense, and rent expense are all going to be on the income statement. Common stock and cash will be on the balance sheet. The beginning retained earnings amount will be in the statement of retained earnings. Salaries expense will be the income statement. Accounts payable, office supplies will be the balance sheet. Dividends is in the statement of retained earnings, and accounts receivable and equipment will be on the balance sheet. So we'll be using those as we go through and complete each one of the exercises. The first exercise that we're going to have is S112, preparing the income statement. So the problem says that we need to prepare an income statement for the year ended December 31st, 2018. You'll notice that I've already completed the heading for the income statement, but I want to go over the heading so you can remember what you need to include. We always have who, what, and when for all of our statements, so that if you can remember that, that will help you when you get ready to do your homework. So the who is the company, Centerpiece Arrangements. What is for this one is the income statement, and the when is for the year ended December 31st, 2018, but it will always be for whatever the period is. It will be for the month ended, for the quarter ended, or for the year ended. So remember, the income statement will always be headed in this way. Now, the first thing that we always have first on our income statement is going to be our revenues. So the revenues are going to be the income for the company. So we're going to go up here and look and see what type of revenue did this company have. And we notice they had service revenue. So that's going to be what we start out with. You always start out with your revenues. So our service revenue amount is $70,000. So we're going to record that on our statement. And then we're going to list our expenses. Remember, the income statement is income minus expenses. So our next category that we're going to list are going to be our expenses. Normally, we always list all of our expenses from the largest amount to the smallest amount, and miscellaneous is usually always listed last regardless of the amount. So we don't have miscellaneous for this company, but we do have expenses. We notice salaries expense, insurance expense, utilities expense, and rent expense. So we have 4 expenses, and we want to put these in the order from largest to smallest. So our first one is going to be salaries expense. We're going to list that. And we're going to make these in a column by themselves so that we can get a subtotal for our total expenses. So we're going to indent just a little bit. Our next expense is going to be rent expense, because that's the next largest one. So rent expense is $16,000. And then we're going to have insurance expense, which is the next one in line, of $4,500. And our last one is going to be our utilities expense, which was the smallest one, of $1,400. Okay, and I have my spreadsheet set up already to total these, and you can do that or just add them together on your calculator and put the total in. So our total expenses, which we have to put a title for, We always want to make sure that we have these listed so we can our users know what is going on. Is 67,900. Now we need to determine what have we got here, net income or net loss. Well, if our revenues of 70,000 exceed our expenses, total expenses of 67,900, then we know that that $2,100 is a net income. Now, it is possible for the business to have a net loss, and that would be if the total expenses exceeded the revenues. And if that were the case, we would have net loss, and we would have a negative amount listed there. Okay, so that is the end of the income statement, and we have to do that one first before we can actually complete the statement of retained earnings, which is going to be our next statement that we're going to complete for exercise S113. And I want to go over the heading again to remind you that it's who, what, and when. So it's centerpiece arrangements, statement of retained earnings, and this one is also for the year ended December 31st, 2018. This is always going to be for a period of time. Okay, so what do we do? How do we start out? Well, we start out with whatever our retained earnings was at the beginning of the year. And the problem told us that retained earnings as of January 1st, 2018 is $5,100. So that's what we're going to start out with. Retained earnings, January 1st, 2018, and that's $5,100. Now, what are we doing in this statement? Well, we're trying to determine the ending balance of retained earnings. What goes into retained earnings? Well, we know that retained earnings is increased if we have a net income, decreased if we have a net loss, and also is decreased for any dividends. Now, in this situation, we've had a net income. So we're going to show that next as an increase for the year to retained earnings. So we'll have net income for the year. And we'll go ahead and list that amount, $2,100. And we're going to get a subtotal here. I added these two together. The spreadsheet is making that computation. We don't really have a title for that, 7,200. We just kind of leave that like it is. But we want to show the total subtotal there. Now, again, what did we say? We subtract dividends. So the problem did have dividends listed of 4,800. So when we put dividends in, we want to do that with a negative because those are going to be amounts we have returned to our shareholders. So those are going to reduce our retained earnings. So now we have completed this statement. And what do we have at the end? Well, we have our retained earnings balance. And what is this for? December 31st, 2018. Okay, so now we know what our ending balance and retained earnings is. And we have to have that amount before we can do the balance sheet. So again, there is an order to doing these. You have to do your income statement first and then your statement of retained earnings before you complete your balance sheet. So now we have finished those two and we're ready to do our balance sheet, which is exercise S114. And this, again, will have a heading, centerpiece arrangements, balance sheet, but notice that our when is only one date, December 31st, 2018, and that is because our balance sheet is going to be as of a particular date. It is not over a period of time. So we are just measuring what are our balances on this date. Okay, and remember that the balance sheet really is the accounting equation. So we have on our left-hand side our assets, and then we're going to have on our right-hand side our liabilities and stockholders' equity, and the totals need to balance. So we're going to start out and do our left-hand side first, and our category is assets. So we make a title for our assets, and when we list the assets that we have, we're going to list them in order of liquidity. So what does liquidity mean? Liquidity is the ease that we can turn something into cash. The faster we can turn something into cash, the more liquid it is. So, of course, cash is our most liquid asset because it's cash. The next most liquid asset that we have usually is going to be our accounts receivable. So when we get ready to do our second one, it will be accounts receivable. So let's go ahead and get cash. listed for $7,200 and our accounts receivable of $8,000. We normally collect accounts receivable within about 30 days, the majority of them, so that's pretty liquid. And then let's see what other assets the problem gave us. As we look down the list, we see two assets, office supplies and equipment, are left. We know that we normally use our office supplies up within the next year. So office supplies are going to be more liquid than our equipment that we'll probably use over several years. So we're going to list office supplies next, and those were $1,700. And then last will be our equipment, and that amount was $12,100. Okay, so we're done with our left-hand side except to put our total description, which is going to be total assets. Okay, so that's the left-hand side. What about the right-hand side? We're going to go back up here and take a look at what we got. Okay, the first thing that's on the right-hand side are our liabilities. When we look down this list, we only see one liability, accounts payable. Okay, so we're not going to have but one liability, but we need to put our heading first. We want to be able to describe what we're listing, and that's going to be accounts payable, and that amount was $17,600. Okay, since we only have one amount, we're not going to do a subtotal for liabilities. If we had more than one liability, we would list it, and then we would get a total liabilities subtotal. But since we don't have but one, we're going to just go ahead with the stockholders' equity, which is our equity category of the balance sheet. So we have our heading, and then let's see what we have in our listing for stockholders' equity. The only item we have up here that we can use is going to be our common stock. Common stock is part of stockholders' equity, and it's usually going to be the first item that we're going to list under stockholders' equity. So we're going to list common stock, and that amount was $9,000. Now the other component of stockholders' equity is retained earnings, but remember that we have to use our retained earnings balance from the statement of retained earnings that we got in this calculation. So we want retained earnings, not the beginning retained earnings, but the ending retained earnings as of December 31st, 2018, and we get that amount from the statement of retained earnings. So that's $2,400. So we see that our totals do equal, our total assets equal our total liabilities and stockholders' equity. So we're in balance, and we have completed our income statement, statement of retained earnings, and the balance sheet. And that is the conclusion of the demonstration for these Chapter 1 exercises.